Thank you, listeners, for joining us today on Ask the Expert. My name is Neil Ohm of Sprott Money News, and we are very excited to have the pleasure of speaking with Peter Spina this morning. Peter Spina is the founder of Goldseek.com and Silverseek.com. He also established the technically focused subscription newsletter Goldseeker Report and merged it into the more comprehensive GoldForecaster.com service. He also founded Silverseek.com in 2003. In addition to the newsletter and the website, Peter frequently appears in the media, including Investors Business Daily, Wall Street Journal's Market Watch, Reuters, and TheStreet.com. With this, I'm pleased to welcome Peter Spina this morning. Hi, Peter.
Hi, Neil. Thank you for having me on your show.
My pleasure. First, let's go into the questions for our customers and our listeners here. Tell me about Goldseek and Silverseek.
Sure. Goldseek and Silverseek are free information news websites which we aim at keeping the investors, gold and silver investors, updated on the latest happenings, providing them the variety of opinions and insights into the markets, not just gold and silver, but also the currency markets, even some of the commodity markets, the financial markets. All of it's really intertwined together and affect the price of gold, which, to understand gold, you really need to understand all these other markets. So it's all interrelated.
Right.
So we provide various resources, information, and we're happy to be celebrating our 10th year on the web with Silverseek.com this month and Goldseek in its 17th year. So we've been providing this information for quite a long time, and we're finally entering a very exciting stage of this gold bull market we've been anticipating for many years. So, yeah.
Definitely, with your 10 years and 17 years under your belt, especially with what's happening right now, and even over the last couple of years, you're kind of on the forefront of seeing this wave and value of these assets. So, congratulations. I mentioned earlier to some of my colleagues here, I was very excited to speak with you this morning, especially with what's happened as of late with the major shortages in the supply of silver American Eagles. And consequently, we're hearing of other government mints and even private mints starting to report shortages on their silver supply. Could you comment on this or give your opinion
Sure.
as to why this might be happening right now?
Sure. Well, the numbers coming out of the U.S. Mint are incredible. The first 2 weeks of the month of January, before they suspended sales, they had something around 5 million ounces, which would, at that kind of a speed rate, would exceed the record sales set last year in January 2012. So 6 million plus ounces was the last record. They're resuming sales end of the month, so it looks like it'll be a record month. At that kind of rate, you're looking at an explosive investment, explosion back in the investment side of the silver market. It's also witnessed by the silver ETF, had a huge influx. Nearly 600 tons of silver was added to the silver ETF, which was I think last week as well. So you're seeing a really strong investment demand coming from the retail side and from the institutional, from the big money side, which is a really strong indication that the physical market's really reviving quickly, which has been one of the really key drivers in moving the price up in silver. So this might be, the start of what sets silver back off. We've been in a really strong consolidation phase. I know that a lot of people say, well, silver is around $30 an ounce. It hasn't been doing that well. And that's something that I think that's really important to also understand, is that if you step back and look at, like, from 2009 onwards, we went from $9 an ounce to nearly $50, and now, trading at and consolidating a pretty healthy $30 or so an ounce. We're seeing some pickup in the investment demand, and as we have seen in the past, the second the investor tries to get in this market, there's not enough supply. So supply can get wiped out very quickly, and then the price starts to really reflect that very quickly too. And that's something on the site we just talked about. The last time the U.S. Silver Eagles started having these supply issues, silver ran from some in the mid-30s to $50 an ounce very quickly. That might not happen the same path this time, but I think this is the start of a much bigger rally in silver that it's going to take it to $50 and then eventually past $50 an ounce.
A longer run, if you will. you could say.
Right.
Interesting. What is your position regarding investing in silver versus gold, since we kind of just touched on those 2 points there, the correlation between the two?
Sure. Well, personally, having invested since the mid-'90s in this sector, and being a big gold bug and turning more into silver, really silver right now is my largest number one investment, physical silver. I see the leverage that's there. The market is very small in comparison to the gold market. So when you're looking at a market with 150 million ounces a year in silver investment demand, that's $3-4 billion. That's nothing compared to the gold market. So when you start to get any serious investment demand into this market, it moves a lot quicker, a lot faster, and you get a lot more leverage versus the gold price. So I've been switching over into the silver market since it was, I made my first purchase around $4 an ounce. But really back when it's around $10 an ounce, started to make a lot more of a move over into silver. And then on the way up, even recently been moving over. I use the gold-silver ratio as a good guide to always stay long the precious metals, but to leverage myself when there's extreme moves. So with around 55 ounces to 1 ounce of gold, 55 ounces of silver to 1 ounce of gold, I see a lot more value in silver. So I've switched over last month more into this heavier silver position.
Sure. Would you say, a lot of our listeners might ask questions, or they might be talking amongst themselves as to what percentage of their portfolio they might have in either gold or silver bullion. What would you recommend to them? I mean, being a silver bug or a gold bug, you probably are on an abstract end of the spectrum, but for average investors, what would you recommend?
Yes, so it comes down to your individual risk profile. I think it's important to understand that silver is a riskier commodity, and it's in the sense that the volatility is very high. But although I'd say, it's being in the U.S. dollar or the euro, which is being debased so aggressively, is more risky than not being in something real like gold or silver. But I think for the average investor, having at least 10% in physical metals, a very nice insurance policy, I would say it's probably more like 20-25%. Myself personally, I'm usually anywhere around 95 to 100% in the market, gold and silver, and have been like that for a very long time. But I spend a lot of time in that. I'm more of a speculator in that sense, but I really truly do not trust the monetary system's stability and integrity, and haven't had that trust for a very long time. And having seen what's happened the last years, I don't think there's any real reason to not be having some sort of gold or silver position, and that's the problem. Most people out there still don't. And if they do want to have, imagine just one small portion of the population in the United States wanting to have a 5% position in silver and or gold. Sure. The metal's not there to get it. You would have to have a lot higher price before you could start to see more supply come into the market. So it's a great time to if you're looking to increase a physical allocation, to do it now. The market's still quiet relatively to what it has been in the past. So I think somewhere 10%, 20%. It's a nice, like I said before, insurance policy to have.
Sure, understood. Do you think that silver investors should convert some of their silver bullion holdings or into gold bullion when silver-gold ratio hits a certain number? You kind of touched on it earlier, like let's say 25 to 1 or 15 to 1, or what would you have to say about that?
Well, if you look at, I don't like to do too much of short-term, day-to-day, or week-to-week, or even month-to-month trading. I like to look more at the month, multi-month, the midterm, long-term trends. And within the bigger trend, eventually, we may return 10 to 1 or 12 to 1 or 15 to 1 ratio. Last time, the peak, I think we were around 30 to 1 on the ratio. We came down from like 80 to 90, or we reverted back to that after, actually, during the crash in 2008. But what I look for, silver $50 an ounce, the last run-up was pretty obvious. That was going to be a big barrier to overcome, and it was going to probably not happen right away. So at that point, I was moving over back into gold.
Sure.
That was kind of a good guide. But I think right now, anywhere around 50, 45, 50 plus is more silver. And as you maybe hit 30 again, maybe it's a good time from a short to midterm to maybe convert over. But longer term, I think, yeah, like the numbers you mentioned, it's more in the teens that would be more enticing. Or I think, yeah, it's that ratio may not occur until we really start targeting the peak of this bull market. It's hard to see gold really outperforming silver if this price is really going to start moving higher.
Sure, understood. Switching gears now, how does central bank buying of gold really work? Do they print money when they buy gold? And if yes, does that mean that if gold crashes 500 points because their cost is effectively zero?
Well, that's a good point, and that's something the Japanese just announced the other day. Unlimited asset purchase program, 13 trillion yen a month to buy government bonds. But these central banks which have low reserves, why don't they just print this money, a limited amount of money that they can print and buy something real? And that's something, you look at, like the United States, or the Federal Reserve Bank is going to print 850 billion, almost, or maybe even more, nearly $1 trillion this year. That is equivalent to 30 years supply and demand for silver. That's over 30 billion ounces of silver, which is what they produce artificially just by, out of thin air, $1 trillion. So, I mean, they do have the ability, if they are buying physical metal, they don't produce anything except for making money. So yeah, I guess that would be true. They purchase gold or silver by just hitting a couple numbers on the keyboard.
Next question kind of spins that around again. That same question. Do they buy gold to be able to use it as collateral at some point in the future?
Yeah, I think it'll be a combination of things. It'll be a way to bring back trust and integrity as a backing to a currency or as a direct collateral, because the trading partner, the country that they're trading with, doesn't want their currency. It sees it as too much of a risk, or a contract doesn't want to be paid back in a certain currency. They want to have it paid back in a physical metal. So that definitely is where gold is returning back to. Gold has money, silver has money. The Basel III is elevating gold from taking it up another tier. So instead of taking 50% of its value as collateral, it'd be 100%. So there's some really big fundamental changes which acknowledge, and I think that's exactly where we're heading, is returning that as money, so these things can happen. Yeah.
Where do you think that leaves like a current gold owner and looking, or a current bullion owner looking at these assets? Where do you think that leaves them in looking at this from a perspective? How do you think people feel about that?
I think it's the reason why a lot of us on our side have been investing in this market, because we believe that gold is money and that gold will return as money of integrity and trust. We have really the U.S. dollar, the euro, as the two competing currencies out there. The Chinese yuan is kind of the next one that they're going to try to float out there, and if they're successful, then you have a lot more dollars that aren't really wanted overseas. So there's, outside of all the money printing, you have other issues in other paper currency markets, but ultimately gold is the money of trust. It is an international currency, and it's has been used that way for thousands of years. So it's just kind of was taking a break there for a while, it looks like.
Yeah. Moving on to the next question, kind of, I guess it would be following the same line of government interaction into fiscal policy. One of our customers' concerns is confiscation of these assets of gold and silver, of the physical metal. Is it possible for the U.S. or Canadian government to take away their bullion?
Absolutely. I think it's something to always consider. you look back in the 30s when Roosevelt issued a confiscation order, confiscating the gold price before they revalued it. So they pretty much stole everyone's gold at half price or so. I think if it were to happen today, it would be different. It wouldn't be a door-to-door kind of seizure. They'd make it very, they'd create big fines and make it more difficult to use gold and silver or whatnot. Pass laws to make it illegal to maybe use it on a private manner and tell you to return it, and that's always a possibility. I guess the other side to that is, well, maybe the silver market, silver itself is safer today to confiscate silver in the past. Gold was.
Sure.
But maybe it's safe to diversify and hold some physically at home, hold some overseas, or there's a new structure that you can, buy your gold and silver and then move it and store it in Switzerland. But the way the structure of that product is, I think it's the ultimate gold trust. They will not obey confiscation orders. So I think there's ways to kind of protect yourself with that. But I think the key is if there is a confiscation, they could go and confiscate the silver, the ETFs out there too. They've got a lot of gold. One of the largest reserves in gold and out there is the gold ETF. But I don't believe the gold ETF actually has all that gold, or the silver ETF out there. The SLV has all that ETF, all that silver behind it either. So.
Sure, it's not the first time I've heard that in talking with our experts as well. Can you talk a little bit about, or take a minute to talk about the physical precious metal market versus the paper markets?
Yes, we have a fractional banking reserve banking system. So a bank has cents on the dollar. They'll maybe keep 5 or 10 cents of your money in the bank and then lend the rest out. And that's kind of the same thing that we see in the paper market. You have, for example, the silver, I think on the CME has about 150 million ounces down their warehouse. They have well over $1 billion, I think 1.5 billion or something, 10 to 1, 11 to 1 outstanding contracts for silver versus the physical that represents that. So we have a kind of the same type of thing happening in these paper markets where you only have a small backing, and we learned from GATA's work during some of the questioning, and just from in general, it's written there. If you have a settlement and the physical's not there, you're going to get paper. So why buy silver through the paper market, hoping that when you want to finally take delivery on it, if you want to take delivery on it, you might actually not get anything except for the paper, which you were trying to avoid in the first place. So it's the volumes, the turnover rate, like in LBMA, they trade several trillion dollars worth of gold each year, which is the same value or more than the value of all the gold ever mined in the world. So these paper markets are dangerous. It's kind of like a game of musical chairs. Maybe
Sure.
There's one chair and 12 people around, and same thing with the banking system. It's just a mathematical probability. At some point, it's going to fail. And when there's that rush where people want physical, these paper markets may not survive. And I don't see how they do have the trust or confidence when the people who have these paper contracts want their physical. So it's something very dangerous. I do not, maybe unless you're a speculator and you're looking to play it really short term. Otherwise, I don't see any real use for that. And it'll be quite an interesting story as these physical shortages happen. If people start trying to go to like the COMEX market, buy a bunch of silver up and take delivery of it. But
yeah, could get interesting. What is your price target for gold and silver in 2013?
Well, the market's been in this consolidation phase. Gold for about a year and a half. Silver also, it's been kind of holding up firmly. Gold 1650 is really strong support. 1600 is kind of the downside targets if there is additional weakness still. 1700 right now short term is for gold a really strong kind of technical resistance, in 1800. But once we break that, it's kind of this, I think, off to the races. Momentum is going to return in the market, and that's when we get our next leg higher. So for silver, it's around $36 an ounce. There's really strong support around 30. So long term, mid to long term, $40 an ounce, and then 50 are the kind of big targets to break, and then it's off to $7,500 an ounce. So gold to $2,500, $3,000, $3,500 an ounce. So they're kind of our next upside targets on the breakout. Time-wise, when that happens, when we break the key technical resistance levels, I think it might still be a bit off, but I wouldn't. It's very difficult short to midterm to predict from my perspective. I can see it happening. It could be happening right now. It could be starting right as we see it. Kind of the market trying to pick up now, but it might not be till second half of this year. It might be even into sometime next year, but it's coming, and when it does happen, it's very quick. So you're either in the market or you're watching it take off. So
Sure.
Just kind of waiting for that next event to happen.
Sure, absolutely. Before we end our interview here together, could you tell our readers and our customers about any upcoming speaking engagements or conferences you're participating in?
Yes, well, we're just finished up our Vancouver Cambridge House show here, which was a very positive, pretty good event. So it kind of shows interest in the market, still strong. Next event is next week, January 31st, Silverseek.com. We're hosting a virtual silver investment conference. Eric Sprott will be our featured keynote speaker, and I believe actually we'll have Sprott Money conference as well. It's online. If you go to silverseek.com, you can find more information out on that.
Very exciting. Well, thank you very much for your time today, and we look forward to interviewing you again soon, talking soon. Thanks again.
Thanks, Neil. Have a good one.
You too.